traders, and welcome to another video review. Today is Tuesday, April 2nd, 2024, the beginning of the new trading week just after the Easter holidays. So let's take a look. What do we have here in the economic calendar for today? As you can see, I got medium and very important data releases for the major currencies, and this is what we had. We got the Japanese 10-year auction overnight. We got nationwide HPI from the UK released at 8 o'clock. And the data completely disappointed the market participants. The forecast was 2.4%. Actual number is 1.4%. So disappointing data from the UK. Retail sales from the Switzerland disappoints as well. Forecast 0.4. Actual number minus 0.2%. Procure PMI better than expected. Previous reading 44. Forecast 45. Actual reading 45.2. We are still waiting for the manufacturing PMI data from Germany, Eurozone, and the UK. So those data might be very, very important. Then at 2 o'clock, we got German CPI data scheduled for release as well. Very important data, because this is what this kind of data is being watched by the European Central Bank in order to, decide whether they should hike the interest rate or not. And during the New York session, we got factory orders, and of course at 4 o'clock, and at the same time JOLT jobs openings from the US scheduled for release 4 o'clock. FOMC member Williams will give a speech 2 hours later at 8 o'clock together with the Mester, and 1 hour and 30 minutes later Daly will give a speech as well. 30 minutes after 10 o'clock we got the API weekly crude oil stock data. So pretty busy day, especially with the manufacturing PMI data. So let's just talk about the majors. We are going to start with the euro dollar, which is going down as anticipated. We just extended the drop towards the level of 1.0725. So we are now testing this technical support, local technical support from the February 16th, during the period of time when we got extremely oversold market conditions. When we zoom out, we can see that there is one more technical support here for the bulls, 1.0694. This is the technical support from the February 14, 2024, and this is where we are heading to. However, with this kind of a negative RSI, we might see some sort of the bounce or pullback, local pullback whatsoever. If there is a kind of a pullback, the closest technical resistance is 1.0769, and then eventually 1.0775. This is the old demand zone that just switched the sides from the demand zone to the supply zone. So right now the upper demand zone will be acting as the supply zone, of course. And what do we have here? We have the new demand zone. This demand zone is located between 1.0695 1.0675. So this is like a 20 let's say pips demand zone. So we are moving our labeling a little bit lower, and these two levels here, 1.0795 is now resistance, 1.0808 is now resistance. So everything here is of course the intraday resistance. Let me just mark the local technical resistance as well for the beginning of the trading on the Tuesday. 0.769 is the technical resistance, local technical resistance, just in line where the 50 periods moving average is as well. So the outlook for the euro dollar remains bearish. What is going on with the British pound? What is going on with the cable? Cable goes down as anticipated by our arrow, as I indicated some time ago. I guess it was last week, and we hit the level of 1.2538. So we are testing this technical support, but If we zoom out, we can see that we are below the black trend line. We are way below the orange one already. The intraday technical resistance is 1.2574. So that's the intraday technical resistance. It's possible that the market will go a little bit higher during the pullback because the momentum is negative and it's hitting almost hitting the extremely oversold conditions. Nevertheless, we should test this low from the February 5th, 2024, located at 1.2517 before major pullback will take place. These levels here, of course, will switch the side and switch the polarity. 1.2602 is now technical resistance and 1.2612 is now technical resistance as well. So we don't need this one anymore. And the rest of the levels is, of course, the technical resistance as well. So the outlook for the British pound looks bearish as well. Please notice that we are still under the bearish pressure. Momentum is negative. Momentum is weak. Occasionally there might be some kind of a pullback. Nevertheless, it all looks rather in favor of bears. So that was the British pound. Let's take a look, because we got data from the USA. Let's take a look at the US dollar index. There you go. We got the US dollar index here. As we anticipated, the US dollar index hit the level of 105 before any major correction could happen into the extremely overbought market conditions. So right now we are just slightly above this level. Local high 105.07, so not that much. Nevertheless, it looks like it's time for some kind of a pullback. So if there is a kind of a pullback, it shouldn't be big. Local technical support 104.47, and this one is here 104.70. We should see some kind of a pullback. Nevertheless, this is pretty nice movement to the upside because it's looking impulsive and it's looking like a steps. Okay, so up we go, step back, up we go, step back. There is no there is not too many overlaps during this movement to the upside, so it looks like kind of an impulsive movement as well, and we should see further extension to the upside after the pullback is done, which means the euro dollar should which means that the US dollar index should straighten across the board, and the majors like euro dollar should move lower whatsoever. Now the other market I would like to speak about is gold. Why? Because gold is on the highs. If we switch to the daily, we can see that last time on the April 1st we got the major high made as well, 2265, and today we got still inside but 1, 2, 3, 4 and 5 wave to the upside is done into the extremely overbought conditions and the bearish divergence between the momentum and the price. So it is a little bit it's still not late for the market to do some sort of the reversal to the downside. I mean reversal, it's like more like a pullback. So the gold should go a little bit lower, roughly around this consolidation here above 2180, maybe 2190, 95, and then continue the uptrend, because gold will go down, US dollar index will go down, euro dollar will go up slightly, pound will go up slightly. When the correction here on gold and US dollar index is done, euro dollar will go down, cable will go down, go up, gold up, and US dollar index up again. Okay, so that's the plan for the gold. And last but not least, let's take a look at the crypto. What is Bitcoin doing? Let me just find out the 4-hour chart. There you go. So the Bitcoin is still doing some sort of the correction. Unfortunately, we got only 3 ways to the upside. So what do we have here? A, B, C to the downside, A, B, C to the upside, right? And now we are doing another A, B, C to the downside. So the Bitcoin is still moving roughly around the same levels as it consolidates the recent gains on a daily time frame chart, because on the 4-hour chart it still looks like a mess here. The bulls doesn't want to go higher than 71,760. As you can see, this level is quite interesting. Let me mark it. So it still looks like a corrective cycle is in progress on Bitcoin, horizontal corrective cycle. Nevertheless, in the background, there is a bullish trend. There's a bullish trend, there's an uptrend. Bulls are in power, bulls are in control. We should see more action like this in the nearest future, because just because we got this free wave movement to the upside, so it's not a classical impulse. Nevertheless, it's still not a kind of a reversal or something like this. No, the next target for bulls is $75,000, and we will get there sooner or later. We almost hit the extremely oversold conditions. Roughly around $66,000, we should see reversal to the upside and breakout above this local trend lines here. Market was consolidating during the weekend, during last weekend, but eventually bears win, and then we should see another extension to the upside, maybe in impulsive fashion. Maybe this consolidation here will be done then, and the market should resume the uptrend on the Bitcoin. Please notice there's only 12 days to the Bitcoin halving. The markets, the crypto markets might get way erratic they are right now, more dynamic, more aggressive. More volatility would come to the market closer we get to the halving date. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.